Good morning, it's Harvey Jackson. We're just going to go through some of the numbers here, StatsCan, possible trade deal with EU, or Great Britain, sorry, and some weather maps, of course, because it's getting important at this time of year. So, U.S. Fed yesterday talked, and there's some pressure on just understanding what the economy is doing and job numbers. So, Fed Chair, as expected, just kept the rate at the current pace, and uh, and his challenge is what the wording was going to be on what he's going to do next, and because of the uncertainty with the jobs and everything else with tariffs, you name it, was going to make it very difficult for him. U.S. Britain expected to announce tariff deal on Thursday. So you can see here that the two sides are working together. They only had a 10% tariff on, but the bigger issue is what is happening globally on the economy with these tariffs, and the first time we actually get potentially a deal done and not just talks. And I said that before, stop the talking, get some deals done, because you've got 90 days and we're halfway through it already. Anyway, here's another I thought just interesting. EU countries back softer carbon dioxide emissions. I guess if they can't hit the targets, they have to soften it because they're going to penalize themselves. Maybe if Europe does this, maybe is Canada going to follow suit as well with the current regime there with his green agenda. Brazil, soy area to grow, and that's maybe a little bit scary at as well, because it's just going to keep taking away from the U.S. And our dependence in Canada is that they have a pretty strong market for their oil seeds, because it helps our oil seed market as well. Even though there's only a partial export here. I thought, and maybe I should just include this with a little bit of a beef story, but I just interestingly, the how the tariffs have been on and off and on and off. Like, this is how many tranches of different information that's been going through, but it's very important to both Canada and Mexico. 82% Canadian beef exports go to the U.S. and 75 from Mexico, and yeah, it's quite important for the beef industry to actually have that tariff free. The active weather that we're seeing in North America is pretty minor at the moment, but you can see here that they're actually talking about some moisture uh, increasing, and you can see if there's an extension that you would look at, there's be moisture in the next week or so that could be hitting us, which is pretty well what we need. So if we look at this is just a build of moisture over time. And you can see by the time we get to the 20th, we're going to have a little bit of rainfall for the prairies, and I think it's well needed. But if guys are just getting started, of course, you might want to get ahead of the rains. Um, there's a few areas of concern of drought that in Europe that is starting to be talked about, of course. And another one that I'm going to be paying attention to for the next couple of weeks is the cold temperatures that we've seen. And as things start to emerge, will be more and more critical. So just looking at the markets here, canola is up, almost $7. The front month or the back month's only up $1.40. Rapeseed up 2.5. Soybean oil up half a penny, and your West Texas is almost up $1. Soybeans up 5 cents. Spring wheat up 4 on the front month, and your red winter wheat is up 4.5. What's also noting, corn is flat, and the Canadian dollar is slightly down, and the U.S. dollar index is actually declining. So here's the StatsCan write up that Kyle had put out. And of course, I'm paying most attention to canola, because this is where the possible squeeze is going to be here. So at 7 o'clock Central, I think it's 7 or 7:30. I'll keep note of that. But the average trade guess is at 6 million metric tons at the end of March. And just if you stop and have a read here, the customs data and the COPA crush and whatever would actually be very close, because I think you need a minimum of 1.5 million metric tons just to carry from July ending crop year to the crop, because you're going to need some stuff for crush, and not everybody sells. Here's just a marine traffic, And this is a Netherlands boat, and not to say that it's going to Netherlands, but I just put it as note because these boats can go right and get loaded right at Thunder Bay, and can get right through the locks and go right to Netherlands. It's not a transload, so just FYI. Canola futures here, we're pretty good candle today, nice green candle. Now we're trying to break out to new highs here, so we're trading right at resistance at the moment. So the guys that got in somewhere in this area still done pretty well, and hopefully the StatsCan report will give us some better news. So the difference between old crop and new crop, and I've been talking about the spreads, but you can see that we're just trying to get to some of the highs that we made previously 3 times, and we're just trying to get back to it now. Rapeseed not having the same kind of run. So this is the August contract because the May contract is now finished. Here's your spread differential on November to November, and we are just at $80.50. And if 60 to $80 differential is the par, yeah. So if that's the case, we're kind of at par values for new crop. Soybean oil, still not quite the right trend that we're looking for. But a green day does add some support, or maybe canola is actually supporting the soybean oil here. It's quite possible. We've seen that in 21. Soybean futures doing the same trend as oil, but the meal, holy smoke! If you look at a longer term trend here, this is part of the reason why I am not too concerned about China not buying meal, because they can buy canola meal, they can buy soybean meal for pretty good values worldwide. Crude oil, and like I said, the last couple of days we've been kind of recovering here, but I would still be looking at potential to lock in a little bit more if you need. I've seen some articles that are actually talking about $45 barrel. I am not in that camp if the world economy gets under the thumb of the tariffs here. Canadian dollar looks like it's coming down a little wee bit off there, but it's still trading that upward range here. US dollar index is starting to trend up a little wee bit. So let's just have a look at wheat. Looks like we're in this wedge here, of course, and which way we're going to break out. The hope would be that way. Same thing. This is your hard red winter. Same idea. Hope to break out of that wedge. And your downward trend that we're seeing on the corn futures here as well. This is just a article or just a screen grab that Susan Shroud had put out, and it just kind of demonstrates where you are as far as seasonality of the big four for corn. So Ukraine is supposedly at one point we're number 2 back here, but they are not as far as the seasonality goes. But U.S.'s seasonality is right now, and we'll look forward to the report later on today.